Milan. I will be continuing with this paper here, which is November, DBE, November 2022. It was in paper two. It deals more with inventory and that I did 2.1 and today I'm going to do 2.2, which relates to inventory or stock valuation. Now we have Pitin Sports Shop is owned by Milo Slav or Slev. The financial year ended 28th February 2022. The stock records of the following two products are provided. So they sell mountain bikes as well as powdered energy drinks, which is 1 kg top. You know what a top is, right? It's basically that container. I know that in the hood we normally call it and I repeat now. Scuff yeah, call it scuff tea. It's a tub. It's normally an ice cream tub. So basically they sell them in tubs. And it's 1 kg tub, which is sort of like scuff tin Rama 1 kg, if you know what I'm talking about, or Rama, which is margarine. Okay. So basically that's how big it is. It is powdered energy drinks, all right? I'm thinking this is the one that is normally taken by those that go to gym, all right? And they also sell mountain bikes. The stock of mountain bikes is valued using the specific identification stock valuation method. All right, we need to calculate the value of closing stock on the 28th of February 2022 using specific identification method. Guys, when you see specific identification method, you must be excited because this one is quite easy. It tells you what the value of your closing stock is. So they must either give you the number of units that are closing stock, and then they must give you the cost price of that closing stock, because you only recognize the cost of a product by multiplying it by its cost price, original cost price. So we don't apply first in, first out method here. We don't apply weighted average. You just trace it. So basically, if I bought this laptop for 18,000, the cost price of this laptop will always be 18,000. It's easy for me to identify it. It means that normally this method is used by businesses that use high valued items, and those high valued items, we don't have a lot of it. Okay, like for instance, a car dealer only has like 20 cars on the floor. So it's easy for you to trace the cost price of each car. Okay. And then they say in 2.2.2, a whistleblower or an informant reported to Milo that he has evidence to prove that the purchasing manager is stealing mountain bikes purchased by the business. An investigation revealed that 40 units of the King model, obviously we have different models of mountain bikes, are missing from the stock records, was supplied to Easy Rides, a competitor. Wow. So this guy works for Milo and then takes or steals bicycles and sells them to the competitor. Interesting. And there were no other stock shortages. All right. First of all, there needs to be everything that goes out of the warehouse must be authorized by someone. So we can't have the same person that is responsible for keeping the bikes safe or counting the bikes being the same person that monitors everything that leaves the warehouse. Where are the cameras to the warehouse? Is there someone that checks the cameras now and then? Whenever they see this guy driving off with these bicycles, do they question as to why? Is there someone that authorizes everything that goes out of the warehouse? Please know that there needs to be someone at the warehouse that authorizes everything that goes in and out. And that person mustn't be the same person that purchases, that orders, that receives, that obviously can be the person that receives, but it mustn't be the same person that takes everything to where they're supposed to be, to the floor space. Okay. So there need to be cameras that are supervising everybody. And if someone goes out with something, where's the necessary papers? Who is authorizing that? Who is signing or allowing you to take those bicycles out? So these are the things that we need to ask ourselves, okay? And then they say explain using two examples. of how the division of duties could prevent an incident such as this from occurring again in the future. Now, I hate it when I ask people, what are measures can we put in place to make sure that this doesn't happen? People will normally say that we must put in division of duties. You're not saying anything when you put in division of duties. As a matter of fact, I won't give you a mark for that. You need to specify how are you going to apply those division of duties. Okay, first of all, the person that receives mustn't be the same person that ordered. The person that puts the bicycles on the floor mustn't be the same person that received the goods at the delivery site or delivery space. And when those goods enter, if someone is the one that is collecting the goods, those goods before they enter the warehouse, they must be signed by someone that is at the door, and there needs to be cameras, and then there needs to be, everything must be filed before that person goes in, and then they must pack it there. Anything that wants to go out, it must be authorized again by a different person. So these are the things that you need to talk about. Don't just say division of duties, because you are basically saying nothing at all. Okay, now they say provide 2 points that show that Milo and his customers are happy with the quality of Gamma bikes, quote figures. Okay, the only thing that I can think of when we talk about quality is it's all about returns. We look at debtors allowances. If there are few returns, then we can say that those goods are of high quality. That's why when we recognize debtors allowances, we show it separately. We don't put it in sales, because we want to see how many customers returned goods. Okay, the number of customers return goods gives us an indication of the quality of the product that we're selling. High quality products is hard to return those. Okay, and then we'll also look at a stock turnover rate. Are we converting these bicycles into cash more quickly? We look at the stock holding period. Are we holding to them for too long? If we are holding to them for too long, it means that probably there are better bicycles, better, cheaper bicycles out there. And it means that we are selling low quality bicycles. Okay. And actually I was shocked when you look at bicycle prices, guys. Yeah. I wanted to join this bicycle thing, riding thing, and one bicycle that I saw was around 10,000. I was like, no, thank you for now. All right, let's check here. So these are the different types of mountain bikes we got. I'm looking at the value because the first question asked us to calculate the value of closing stock. I realized that we don't have the Palo closing stock. We also don't have Gamma closing stock. We'll discuss those later. And then they gave us the markups for each and total sales amount for each. They also gave us the selling price per unit. And one thing I noticed is that we don't have the cost price for Gamma, but we have the selling price per unit for Gamma, and we also have the markup. So we can use that selling price per unit to find the cost price per unit. That is for Gamma bicycles. Okay, that's one thing I noticed. But for both Gamma and Palo, we don't have the number of, or actually for Palo, we don't have the number of bicycles on hand on the 28th of Feb, but we do have for Gamma. Okay, obviously for both, we need to calculate the value of our closing stock. So for Palo, we have cost per unit, but we don't have the number of bicycles on hand. So we need to calculate that so that we can calculate the value of closing stock. And for Gamma, we have the number of units on hand, but we don't have the cost price per unit. But I specify that we have the selling price per unit. We can use that together with the markup to calculate the cost price per unit. Okay. And this is what's nice about specific identification method. The cost price is easily identifiable. You don't need to calculate it. Okay. You don't need to ask yourself, you don't have different products that are sold at different prices. Here we know that King bicycles, the cost price per unit will be 4,500. Paolo bicycle, the cost price per unit will be 5,200. It doesn't have different prices. So the cost price is specific. Okay. And for Gamma, we have, we don't know what the cost price is, but it will be specific. That's why we call it specific identification method. Easier than first in, first out, easier than weighted average. Weighted average, that's why we bought a lot of items, but you don't know what each item will cost. That's why we have to calculate the average price using the formula. Please check out the videos on inventory where I explained the formulas. Check the 2022 November IEB paper for inventory where I specified, I showed you the formula on how to calculate weighted average cost per unit. Here it is not necessary. It is not necessary. Okay, it's basically unnecessary for us to do that. And then we have powered energy drinks. We know that we're using periodic inventory system. Whenever you see in periodic inventory system, they're simply telling you that to calculate the cost price of this product, you have to use the formula opening plus purchases minus returns plus coverage on purchases minus the value of your closing stock. So whenever they say periodic, that's the formula that you need to use. It doesn't matter whether you're using first in, first out system or you're using weighted average method. For both, whenever they tell you about periodic, you just have to use that formula. It means that the value of your cost of sales can only be calculated at the end of the period when we have done our stock count. That's what it simply tells you. Okay. And obviously after the stock count, you need to ask yourself, how do we value these units that we have left? And stock count is also very necessary, like going back to the bicycles that were stolen. Who is comparing? I know that Mahani is working at Nestle, and she always tells me about she's responsible for writing off expired goods. All right. And question is, who is actually guilty of that? Why are we having expired goods? Why do we have goods that we have manufactured that we haven't yet sold? Is it really a matter of us not having enough demand? But for a company like Nestle, I think they have a huge demand. So we can say that it's all about the control measures, internal control measures that they put in place to manufacture goods, enough goods that are enough, a lot of them, but at the same time, make sure that they get rid of them. So there needs to be proper factory layout to make sure that whatever has been manufactured goes immediately so that you don't have to, because I feel like it's just unnecessary waste to have manufactured something and then it's wasted. And we'll talk about that later. Okay. But stock counting, I'm just referring to the previous question that we had, where this person was stealing bicycles and then taking them to the competitor. Why did we have to rely on the whistleblower? Why was it not picked up? Now I'm asking myself, because I know my mom always tells me that we have to reconcile our stock records to what we have on the floor. So they needs to be the same. They need to be in harmony. Who is doing that? And or for Milo, when it comes to those bicycles, who is doing that? Because that needs to be done. And the person that does that will specify, will actually be able to identify goods that were stolen, goods that are expiring, and all of that. Okay. And we've got, we have to calculate here, we have to calculate the value of stock using first in, first out. Please check out my previous videos as well. A lot of people think that IEB and DBE are completely different. Fortunately, I taught, I'm teaching at IEB now, and I taught at DBE. To me, yeah. You can argue all you want, but to me, the both systems to me are pretty much similar. It's just that IB has certain way of asking questions and DB has certain way of asking questions, but the concepts are pretty much the same. Okay, they're pretty much the same. Obviously, most IEB papers, when I compare, they're a little bit more challenging, but I don't think that challenging. As long as you know your basics, this should be easy for you. It should be easy for you. And as such, I do find some DBE questions that are a bit more challenging than IEB questions. To me, pretty much they both the same type of systems. Especially, but I think the huge difference is when it comes to paper 2, where IEB focuses on the practicals. All right, we used real companies. So we're not just asking you to calculate liquidity. We're asking you to calculate shop price liquidity and comment on shop price, which is a real thing. And they use actual figures. I remember doing it in my first year, and I realized they actually use actual figures. They're taking the actual financial statements of ShopRite, of Pick and Pay, of Clicks, of Discount, of whatever, and they making you analyze that, which is what I never did actually until my third year. Okay, so they're exposing you to the real world as to how this applies in the real world, which is what I think DBE must also adapt to make sure that we pretty much the same. Okay, yeah. Let me continue. And then it says calculate the stock holding period in days on the 28th of February. Stock holding period formula. Let me try to remember it from the top of my head. I think it's average inventory, which is closing stock for this year plus closing stock for last year. Obviously, closing stock for last year will be opening stock for this year. You divide it by 2 and then you divide it by cost of sales times 365 or 12 months if you're working with months. And then they ask you to comment on the findings above. Obviously, we don't know what we're going to have in 2.2.5, so that will, the answer for 2.2.6 will depend on the answer you got in 2.2.5. Okay. Accounting, it's a very interesting subject, actually. I feel like everyone should be doing accounting. Yeah, everyone should be doing accounting. It gives you real examples. It gives you real life examples, to be honest. All right, let me just move on. Milo has noticed that some of the stock of energy drink has exceeded the shelf life. All right, remember this is powdered energy drink, right? They have exceeded this shelf life, which is they have exceeded, we normally, when you go and buy at Pick and Pay, ShopRite, wow, giving them free air. You will notice they will tell you sell by date and they will tell you the expiry date. Okay. Sell by date means that by that date, they shouldn't be in the shelves. And I've seen some, especially when you look at your ShopRite in the hood, in one of the hoods where the product was still there, but it has exceeded its shelf life, even though it hasn't reached its expiry date. But I feel like, but you said it shouldn't exceed this, so it shouldn't be on the shelves in the first place. Okay. And I also noticed something interesting that they do. So when you buy milk, the milk that will expire next month, they normally put it in front. The one that will expire in 2 months' time, they put it at the back of the shelf. So that's they're trying to say that whatever came first should be the one that you buy. And most people, when they buy milk and other things, they just take whatever is in front, right at the front of the shelf. And most of the products that will expire at the later stage, they normally put them at the back, which is a good strategy. Okay, and they also do that with bread and those bread and muffins and um, rolls, the ones that expire, actually the ones that are still fresh that were manufactured today, they normally put them either at the bottom or at the back. The ones that were baked yesterday, they'll put them at the front, and people normally take whatever is in front. You need to go back and check which one was manufactured today and take the fresh one. So go straight there and ask them to pack them for you. Okay. And that's what they normally do. Now let's see here. They say identify the value of stock that Milo is referring to. Okay, so we need to check, they need to tell us the shelf life, or they told the shelf life there is 66 days. So 66 days is 2 months and 6 days. Okay, so if this product is part of our closing stock, we still have it. We haven't sold it yet. We still have it. But when we count from when we purchased it until the end of the period, we realize it exceeded 2 months and 6 days. Then it has exceeded its shelf life. Okay, so we need to check which product will that be. And then they say Milo wants to sell the outdated stock of at half the cost price. What advice would you offer him about this proposal? Oh, considering that this is something that will be eaten already, it's chemicals, it's an energy drink. That could be very harmful to people that consume it. So, no, 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 no. Especially if it has exceeded its useful life. Know that if people get sick because of this, it creates bad reputation for the company. The share price of a company will go down. These are the things we do under companies, by the way. And then no one will want to buy from Milo again because of that. If we were talking about things that can still be used even though they have reached their shelf life, then yeah, but in this case, no, considering this is an energy drink and already energy drinks are causing chaos. I mean, I know that was this energy drink that everyone was crazy about that was selling for 42 rand, and apparently it's cost around 400 rand, but it was 42 rand at Checkers. Uh, damn it. Sorry for that. I forgot the name of the energy drink that everyone was crazy about not long ago. Prime, that's the energy drink. Prime. Okay. Yes. And already it was causing problems for certain people, and even it hasn't even exceeded its shelf life, but it was creating health problems for people. So no, such a product, when it's bad, get rid of it. You don't sell it to people because people might get sick. I mean, they get sick with the product whilst it has not yet reached its useful life. Okay. So don't even try it. Okay, Milo, don't even try it. Get rid of the product, recognize it as a loss, and then put it as trading stock deficit or whatever. Do not sell this product to your customers. You, just like Nestle, just like any other manufacturing company, you need to make sure that you get rid of your products as soon as possible. Make sure that your flow layout is okay, and your packaging. I think that's where everything gets stuck. Your packaging, make sure that it's flowing. So whatever you manufacture, make sure that it's gone. Okay. Because that's one thing I asked my hand, are we having goods that are expiring for a company like Nestle that sells to big corporates? Why are they having it in the first place? It doesn't make sense. Because there's demand for it. So why is it there in the warehouse? So someone there is just messing up. Someone is messing up, and this needs to go out quickly before it expires. I'm giving you real examples. These are things that are happening in the real world. Okay, we shouldn't have such things, okay? Especially if there is enough demand for the product. Yes, if there's no demand, then that makes sense. But if there's enough demand for your product, it doesn't make sense. But even if there is less demand for your product, by now you should know how much demand your product has, and you only manufacture what you need. That's why we call it optimum manufacturing. I know they have optimal ordering, and maybe we must have optimum manufacturing. You only manufacture what is needed. You don't manufacture more than what is needed. Okay, enough about that. Now, question is, can companies like Nestle and so on sell those products at half prices? Who's going to buy them? Because corporates, businesses like ShopRite won't buy them. Probably they can sell them to their employees. But again, if you sell products to employees that have expired, what are you saying to employees? So you don't value them at all. Okay. Probably Nestle does what it does is, well, it just gets rid of them, recognizes them as a loss. Okay. But what if they expire next month? Can they sell them to their employee this month? Maybe not sell, but at least give them away. Okay. If they expire in 2 months' time, then yeah, you can sell them at half price or cost price. Okay. That's what I believe, and I think that's what Nestle does as well, which is good. But why are we at that stage? And that is my biggest question for big corporates. Why are we at that stage when there's enough demand already? And at the same time, we need to make sure that the manufacturing doesn't cause problems. I don't know if it's KitKat where they were recalled because they were suspecting that there were glasses in it. And I think Tiger Brands is going through that a lot. Not even Tiger Brands. Woolworths was taking some shelves, recalling some products. I think it was Vianas or something. They were asking customers to return them. I don't know what the problem was. Note that when we have such scenarios, they cause problems because it's a bad reputation for the company. Okay, so we can't have such problems. Understand that. Accounting is so interesting, guys. You have no idea. Anyway, let me just move on. So this is what we have as a value of closing stock. Note that with this powered drink, it's all about first in, first out. It makes sense why it's first in, first out, because if you don't sell this as soon as possible, then the ones that have expired might cause health hazard to people that you sell them to. Okay. And people might not buy it if they realize, why must I buy it now if I'm going to use it for the entire month, but it only expires in 30 days. So it makes sense why we have to apply first in, first out here. Okay. So basically the first units we're going to sell would be the ones that we had, which is 130 units. Okay. Then we're going to sell 550, then we're going to sell 330, then we're going to sell 180. 180 will be the last units that we sell. So meaning that 180 tends to be stands to be part of our closing stock. The last purchase will be the one that becomes our closing stock. So when you calculate the number of units of our closing stock, we'll start from 180 and move to the last purchase.